You're listening to the Property Management Excellence Podcast for insights that drive rapid rental growth.
Welcome back. Fantastic to have you with us again. Alex Whitlock. I am the co-founder of Managed. I'm also a director of REB. We're on the PMX podcast, Property Management Excellence, podcast that I particularly love doing. And I'm really pleased to welcome a friend, somebody I've worked with in terms of media for a long time. It's a privilege to have him on the show. Alistair Shearer, who is partner and head of property management with Belle Property, Mornington and also Mount Eliza. I've known Alistair for a long time. This is going to be an extension of the kind of conversations we have when we catch up.
Yeah.
We're going to get into it. Alistair he's a property management professional who has an inherent focus on growth, but growth for growth's sake is not a fundamentally good thing for an agency. There is a whole bunch of disciplines, focuses, evaluations around that. Is that a reasonable introduction?
It is. It's great. With any sort of a growth strategy, you've got to look at why are we doing it and does it make sense for the business? That's the biggest thing that needs to be addressed first. Before you move into this growth phase, you've got to look at your existing department. What are the capacities? What are the pressure points? Where's the weaknesses that we need to address before we scale up our business? And that's the starting point for any strategy there.
I think it's really interesting as a customer of property management for many, many years, looking at sort of what you're building. So, you build something, but if you're building it the wrong way, you can grow quickly. But if you're growing with, I guess, the wrong philosophy, maybe the wrong fee structure, maybe the wrong relationship with your customers, what you're doing is you're building a problem, potentially.
Well, you're just expanding the problem and magnifying it. And look, it's easy to just go and buy a rent roll, add it to the top, and just hope it all goes well. Unfortunately, it doesn't work like that.
Yeah.
You can put yourself in a position where you'll cost yourself a lot of money and have a lot of losses, and also your reputation can be a little bit damaged as well. You've got to set your standards and your expectations of your existing team and your existing business, and you've got to have either an acquisition or a growth strategy that is aligned with that.
Before we get into the strategy, I'd like to ask you about a growth mentality. Now, I know you very well. It's something which is sort of right through the middle of you, but you need a team to be aligned. So how do you instill a growth mentality with the teams? And then if there are other stakeholders, directing the business, how do you sort of articulate that to them and make sure everyone's on the same page?
Well, first of all, it starts at the top.
Yeah.
You've got to have the management team, the owners, all in alignment with, are we growing or are we just in maintenance mode as a business?
And maintenance may be the strategy for the
that
agency.
That works for some. It just depends on what the goals for the business is. Now, if it is about growing, we need to prepare for that. And it starts with looking at our existing team, looking at the skills and capabilities of each individual. Is everybody sitting in the right seats? Do we have business development? Do we have all of our current processes working effectively at this level? Because as soon as we scale it up, we're going to magnify the problem if we don't get it right at the smaller level that's existing there. So
What I'm interested in is the human element. So stepping outside of the agency, and one of the things that I have come to see very clearly is there is a disconnect between customer and agency very often. And I wrangle over where that problem starts and finishes. And so just to give you a bit of clarity, in my experience, I think the vast bulk of owners don't understand or value what the property manager does. We all know, we're not going to preach to the converted here. We know how hard PMs work. But the bottom line is that I can see bad behaviours and also working in Managed, I see it flow through to our platform.
Of course.
So, and it's quite an interesting observation. So there's almost like this passing of kind of anxiety, if you will. So we can end up with PMs can get sort of frustrated,
stressed
when there are changes on our platform. And I kind of look back and I go, where's this come from? And you realise that it's a kind of a knock-on effect because PMs get often treated pretty badly by their customers. Demanding owners. I spend a lot of time now with PMs and also with principals, and I see the things that they do and the way that they get treated and spoken to, mainly by the owners, sometimes by the tenants.
Look, unfortunately, the owner has probably nobody else to vent to regarding their investment property. And it's all about how we manage that situation.
And educate them.
And educate them.
Yeah.
That's the biggest piece with there. We need to, first of all, have an understanding what is their long-term investment goals with this property. Have they just got it on the market to sell it in 12 months' time? Are they building a portfolio of 10, 20 properties? What are their goals? If we have an understanding of that up front, that will change how we handle different situations and how we advise them in different elements of the process.
It changes the value in the relationship fundamentally, though, Alistair. And it's so refreshing to hear that because property managers and property management professionals are in a unique position with owners. There is this untapped and as yet in many instances unrecognised value. And I think that if you don't educate your owner, then they will see you as being the bearer of bad news. Put your hand back in your wallet.
Yes.
I've got another tenant request. you know what I mean?
It's because it's not proactive communication in general. We tend to call them when there's a maintenance issue or when the tenant's gone into rental arrears. We call them at the bad points. Whereas during the good opportunities that we maybe talk about a rent review, bring them up, great, the market's moved 10%, we can increase your rent 10% and really make that a positive conversation. Or we've just conducted a routine inspection at your property, we noticed this, and this. If you were to spend maybe $10,000, upgrade the bathroom, do some minor renovations, you could see a result looking more like this. And that's where it starts to come back to shifting the relationship into this bad news reactive to this is my property management advisor. They're telling me what I need to do to make more money.
Absolutely, yeah. And I think you highlight it's the big opportunities on the way in.
Yeah.
Give me some examples of how you interact, or maybe some scenarios of how you maybe interact with some of your owners and the process that you go through in terms of educating them on the way in and then the results further down the track.
So when we bring on new business, we spend could be a couple of hours with them, walking them through every part of the process. That's from
face-to-face or?
Face-to-face, yeah. And if not face-to-face, over a Teams meeting.
Yes, if they're interstate.
Interstate, yeah. But we definitely want that face-to-face where we can talk to them like they're an actual person and not just sending an email and there's my presentation, that's the end of it. That yes, they'll read it, but it's more about building that relationship, making them have confidence that you know what you're doing and addressing any concerns that they might have. The only way to do that is have a conversation with them, find out where their concerns might be. They might have had a friend that had something horrible happen in their property. We need to know about that.
Yep.
So we need to explain how that won't happen under our management because of the processes and systems that we have in place that address that proactively, not reactive. So I had an example the other day where I sat down, walked through the whole process, probably spent 2 hours in this presentation. A new investor, he had no idea what to do. Goes, I just want to rent my property out. I need to move to the city for work purposes. I don't want to sell it. What do I need to do? Walked him through that whole journey. By the end of it, he turned around and said to me, because I had our management fees at the end of the presentation. He asked me a couple of times through the presentation.
How much is it going to cost me?
Yeah. What's all this going to cost me? Because it was almost like I could see, oh my goodness, the list just kept going on and on.
Because you're articulating the services that you provide and the value you provide.
That's right. And we broke it up into, this is the leasing and advertising component. When the property is leased, this is what it looks like under management. Then in the lead up to the end of that lease, what we proactively do to review the market and ascertain the tenant's intentions, and then we communicate that back to you, and we work out the strategy from there, whether we need to be releasing the property and so on. By the time we got to the end of it, he was like, oh my goodness, this is going to cost me a fortune. We disclosed our fee. We're 7.7%, which a little bit on the higher side for our area, but we're a premium agency, so that's what our service levels matches that. And he was like, oh my goodness, I thought it'd be a lot more than that. And I was quite shocked at that comment because I was like, wow, you just need to make sure that you explain it to them.
And articulate value.
Articulate the value and they will pay for it. They see value in it.
You can look at how a lot of owners end up, not all, but some of them end up with the PM because a buyer's agent has said, use this one because they've got maybe some relationship with the sales agent. Buyer's agents don't really care.
No.
And all they want to do is give a rental appraisal so they can get...
They're trying to get the yields, get the figures all worked out, do a sales transaction, and then moving on to the next one.
So, look, the focus of this is really about growth. And I think it's worth looking at the fundamentals, though, because without retention of owners, without value from owner to agency and for the team that's working with that owner, then there is no growth, or you're gonna be losing them out of the back door as quickly as you're adding them through the front.
And that's a very important point. There's no point listing them as quick as they're walking out the back door.
Yeah.
You've got to be retaining and finding out where the problems are, if there is any problems in your existing PM department. Because you can be listing like crazy, bringing them all in, but if they're walking out, it's what's the net figure growth? How much per month are we ahead is what we need to be measuring and looking at. Because
it's relatively easy for owners to switch PMs. And I hadn't realised this as an owner. And when I started moving my properties onto because I wanted all mine unmanaged.
Yes.
I sort of thought it was going to be difficult. And the PMs that I'd used were actually quite good, but I want to be on that system and see the transparency around payments.
Yes.
And I'd never moved. I never switched PM before. And I went to one of the agents. They went, "Yeah, we just need an email."
Yeah.
Went, really?
And it's literally an email to the agency,
it's
and it's
email.
like management takeover. That's the end of it.
And the agencies were incredibly cooperative with each other.
Yeah.
This was an eye opener for me as an owner.
Yes.
And again, instinctively, as a business person, I go, well, that's that's really great to bring them in, but equally, it's so easy for people to move.
It's very dangerous.
It is.
If you're not looking after your people, that's what it comes down to. If you're looking after your clients, they won't leave. There's no reason for them to leave. That's what it's all about. Making sure, but not just looking after them, making sure that they feel like you're working for them.
Yes.
And that there is value in that. Otherwise, they will move to a cheaper agency for that 1%. And then we look at it and go, well, why did they move? It's only 1%. But they didn't see value in your agency.
Prices are really interesting. It's such an interesting concept in terms of where business goes. If you and it all comes down to value, Alistair. And if I'm just going to buy on the lowest price, then we know, through you can take your pick from clothing to cars, from food to whatever. If you go for the cheapest price, you're probably getting the a budget product and a budget service. But there's the opportunity on the way in. I think for most people are quite discerning, and even people who will buy cheap, there are going to be certain things in their life that they will make sure they spend a premium because they expect a premium in return, and the opportunity is there.
Well, they don't know what they don't know.
Yeah.
That's really what it comes down to. Yes, they might be thrifty in other areas, and we see lots of successful and wealthy people thrifty in some areas, but then other areas, when it's usually advisory, accounting, legal, they spare no expense.
I'll give you a scenario, real time. So for us in business, and I learned the hard way. So we used a recruiter.
Yes.
And we don't tend to use a recruiter now, but we went through a phase where we used a recruiter. So guess what we did? We chipped away at their recruitment commission, right? Logical thing to do.
Negotiate it. Yeah.
And guess what happened? The quality of the candidates went down.
Yeah, because they kept their premium candidates for where they get paid the most.
So the simple logic in the first place was, okay, how about you do it for a cheaper fee, or maybe I won't use you because you're 17.5% or whatever it was. Oh, but this one here does it for 10.
Yeah.
But you get what you pay for in life. We all know that, right?
That's
but
exactly
yet
right,
people are stupid because you can end up, if you're not educated by the partner, you can end up, and I love the scenario with working with an owner and because you'd articulated value first, the price then, well, he feels that he's getting way below what he would have been prepared to pay.
That's right.
So
and it all comes back to, because I've had other scenarios where I've sat down with people and they've said, oh, there's other agents at 5.5%. Yeah, there is.
Yep.
We're not that agency. And
what is it you want?
What are you looking for? Are they going to do everything that we are going to do? Is it comparing apples with apples? And often it's not. Often the service levels at a cheaper agency is going to be nowhere near what a premium agency will provide, because they've got it's common sense. They've got more money. They can pay their staff more. They can have bigger and better of everything in their systems, their processes, the whole lot. Versus the poor agency down the road that property manager goes on leave and no one's looking after the portfolio because they can't afford to put a temp staff member or even absorb it within the existing team.
I'm going to take a break in a moment, but before we do, I'm just focusing on teams and staff, and
Yes.
you've got a lot of experience in building teams. How important is it to? I'm going to ask you a bunch of questions here.
Sure.
First of all, to bring in experienced PMs into the business versus people who have maybe the talent and capacity to do the job, and how much can you change mindset, and how important is mindset within your teams?
The mindset is the most important thing. You've got to have the culture piece right within the team. Everybody has got to be on board with the journey of the business. And those priorities for the business have to be communicated through the team. And we have to have all staff members, whether it's reception, whether it's support staff, whether it's offshore even, aligned to the journey.
What proportion of your team, whether currently or whether sort of historically, is onshore versus offshore?
We'd probably have about 10% offshore,
Yep.
I'd say. Yeah. And they mainly look after the administration tasks,
Yep.
freeing up the property management team to focus on that relationship piece.
Excellent.
It's not so much it's not about the cost saving there. People get confused with
Yeah.
that. They tend to think, oh, we're hiring offshore just to save costs. It's not about that. And it's not about replacing roles. It's about realigning who does what in the business.
Yeah, working out who needs to be on the ground.
Yeah, exactly.
We're going to take a quick break. When we come back, I'd like to really sort of pick your brains around growth. And I know that you've grown organically very strongly in
Yes.
in previous businesses, and you've also been very successful through acquisitions. So we'll have a quick look at that when we get back. Don't go anywhere. Welcome back. Privileged to be with Alistair Shearer, his partner head in property management at Belle Property, Mornington and Mount Eliza. The focus of this podcast is really to getting a bit of a background on how Alistair structures his teams and views his customers. It's a really look at growth. Growth is for many agencies what they're seeking. We kind of touched on the fact that growth is not necessary for everyone, and growth at any cost is not a good thing for a business. But look, let's assume that we're in a position where we're not, you're in a business where you know why you want to grow.
Yeah.
You maybe know where you want to go. We've sort of touched on having the infrastructure to retain before you start acquiring. But in terms of growth, you've got your two levers essentially, which is organic, which would come via your BDMs and referrals and various other mechanisms. And then there's going out and there is actually buying up offices. And I know you've been successful in both areas.
Correct.
Do you have a combined strategy moving forward from here?
I believe you have to have a combined strategy. You can't do one or the other. And it's got to fit. So you will have your natural growth, your organic sort of strategy in play with your business development team. You'll be capturing leads, you'll be monitoring those, you'll be converting those. But your acquisition type approach, it needs to just make sense.
Yeah.
Is it in your existing market? Is it an adjoining suburb? What does that look like for your business? And what are even to the point of what are the type of properties that they got?
And you could end up with liabilities. It's like any kind of business growth. As you expand, overheads go up, teams change. Maybe you overextend geographically and you can't cover your territory. So it's not just, oh, great, we'll go and acquire. There are opportunities and costs with that.
There is. And it's not just about adding the numbers too. It's like, how much are these properties generating each year for the business?
Yeah.
And is that going to increase or reduce our average commissions that we're receiving each year? So
I'm going to come back to acquisition in a moment. I just want to look at organic. So everyone understands what organic growth is, but what are some of the things that you've learned over the years to increase? So you've got to get the inquiry coming in and seek the opportunity. You've then got to convert and win them over.
Yes.
So what are the things that agencies should be doing in terms of actually getting the inquiry through the door?
Well, believe it or not, the first thing to focus on there is your business development manager or whoever's assigned that
Yeah.
role in the business, could be a head of PM that's doing that role as well. That individual needs to be very closely aligned with the sales team.
Yes.
They need to be in the sales meetings. They need to be communicating with the sales team constantly about what is going on in that side. Because the amount of leakage that can happen out of a business because the property management team and
Yep.
the sales team are not connected
Yes.
is like huge losses. So you get that alignment happening, there's just a win straight off the bat that you will just start converting. Now, that could be things like you ring up every single buyer, whether they're owner-occupied or an investor, upon going unconditional. You build a process into the business
Yeah.
where you just naturally call those people and just introduce yourself. And that's going to start the conversation. Just like that gentleman I spoke to the other day.
Yes.
He was an owner-occupied and things changed. Within 6 months, he had to move to the city. So he's already calling us because
It's so interesting you say that, because there have been a number of purchases that I've made where there's just been no connection. And so
Yeah.
I won't mention the agency name, but I bought off a very high caliber, high quality, recognised for its sales in Sydney's eastern suburbs, a very professional and very ethical and very high quality salesperson. Didn't ask me for and it was a
it should be just an automatic thing.
didn't do
Automatic
and
process,
I moved
yeah.
it over to Grant, who I think you know.
Yeah.
And it was never questioned by that agency. And then years before that, I bought in the Northern Beaches off a sales agent, and I actually sought out off my own back an agency called Shaw's, which are have got an extremely good reputation up there.
Yes.
And their PM, funny enough, came down and sat down with me and travelled to my house and did a 2-hour consultation, and I was extremely happy with them.
Fantastic.
And
yeah.
then the sales agent, after I'd already engaged Shaw's, came towards the settlement. He went, hey, we'll manage it for you. And
Too
too
late.
late. It's
Too
gone.
late.
So it's interesting that you say that.
Yeah, it's got to happen at that unconditional stage.
Yeah.
In fact, it should even be happening. We should be talking as a business to buyers in the marketplace that are investors.
Yeah.
Straight off the bat.
How do you
Everyone
spot
that's
the investors? Is it easy to spot, sort of potential owner?
It's having the
You
sales
just work
team.
hard. Yeah.
Having the sales team educated. Are you buying this for yourself or are you buying it for an investment?
What about working with other sales agents outside of your network?
That happens too.
Yeah.
Yeah, that happens. There's one I was speaking with the other day. She doesn't have PM in her business.
Yes.
So she works closely with us.
Yeah.
So they become referral partners to our business.
Yeah.
So it's not just about restricting it to your own sales team. You could be talking to developers, to buyers agents. They also need somebody on the ground to talk to people.
But your first port of call is look in your own backyard.
That's an easy win. That one. What I find though is what's happened in the past. If the sales team haven't got confidence in the property management team, that's where they struggle to refer the lead because they don't feel it'll get followed up. This is probably
part for a deeper conversation further down the track about, because I see oil and water in property management. I see next gen legacy agencies.
Definitely.
And the attitude, mindset, systems, and understanding of the next gen agencies is just light and day. With it's kind of part of real estate, and I might as well do it because I've been told to do it. And at the end of the day, and a sales agent doesn't want to jeopardize the sale. So why would they taint that with a subpar property manager? You're not going to.
They've got their own reputation.
Of course they have.
And if they say, my property manager's going to call you, and they don't, that makes them look bad, and that's just no good. It was no good for the brand, for the business, for nothing. So you can't have. That's why I say everybody's got to be on board with that growth journey.
I'll tell you something else as well, which I've learned over the years, and again, I've learned a lot more about property management by being closer to it professionally.
Yes.
But as an owner, I mean, I started buying in the 90s, and I remember, and I bought in South Bank when I first started buying off the plan. Wouldn't go into that again as an investor, but the purchases were good. And then I was really surprised that the property manager kept changing, and I kept getting emails saying, "You're probably honestly
the turnover."
And I went, "Oh, I'm just used to dealing with this person here, usually by email, and then they've gone, then somebody else is there," and that was really kind of quite a bit frustrating because I bought 4 properties off the plan.
Yes.
I won't mention again the name. It was a developer that also had a PM business built around the development.
Sure. Yeah.
And they were good, but it was just different people. So they end up feeling a bit disconnected with that process.
Yeah. You want to build a relationship with your property manager as an investor.
And then there's a retention as an operationally.
Yeah.
About building a solid PM proposition. Just looking very quickly to acquisition. We're not going to cover all the nuts and bolts today, but so you've given some fantastic insights, just in terms of organic growth. So through acquisition, how, for stakeholders and
yes,
principals who are listening in, what are the sort of the nuts and bolts of evaluating, moving into it?
You've got to have a look at what's available. And that could be conversations that could go on for many years with other agencies in town.
Yeah.
You could have a couple that's towards the end of their career, they're wanting to get out of it.
Yeah.
So what's their exit strategy? Having those conversations with other principals in the area is key to this. Because it's not always what's just all of a sudden on the market.
Yeah.
This can be going on for...
It's a build-up.
It's a build-up to it. So it's no different than a pipeline that we build for anything else.
Yeah.
So we've got to be having conversations with everybody all the time. They've got to know that you're in that space that would entertain a purchase.
Here's the thing as well, and that's a really good insight. So I would instinctively feel that what you can do is you can potentially reduce friction, because if you educate your local, if you are a growth focused property management business, if you're looking to grow your rent roll through acquisition, if you can educate your colleagues or your sort of other agencies in the local area that you are an acquiring business,
yes,
you can potentially reduce friction for them, because they can then go, oh look, I don't want to go through the agony of
brokers, and the whole process, and that
can save you money in terms of the acquisition. I would imagine if you can do the evaluation effectively.
But the biggest thing that people underestimate in that journey is the selling office needs to have confidence that when you take over those managements, they're going to be retained.
Yeah,
because if you take it over and there's a massive exit of properties because you poorly manage your own business, that's no good for anybody.
Yeah.
So that's also a critical element to it that people often don't realise. It's not just you go and buy it and that's the end of it. You actually got to take on those managements, look after them so you keep them, because there's retention periods and there's if there's so many losses, you don't pay for them. There's all this sort of stuff that in the legal jargon that we won't get into today. But at the end of the day, they need to have confidence in your business that if I sell to you, and you might even be able to pick it up at a slightly cheaper price with the fact that your business is going to look after him and it makes sense than him selling to someone else at a little bit higher multiplier, but there's a risk of a big loss there. So
I know one size definitely will not fit all, but for you, what would be the smallest rent roll that you would consider? Is something too small?
No.
So
I've taken in the past. I've taken a small little business that had 30 properties.
So, well, I was going to say on platform, on our platform, there was one agent who wasn't really a property manager that built up about 17 on the platform, but on platform that was then he notified us. Yep. We then contacted an agent, one of our customers that is very much acquisition focused.
Yes.
Bang.
Done deal.
Very, very simple.
Yeah. It didn't even really need to go to market.
It didn't go to market. It was completely and utterly off market.
Yeah.
So you'd go down. You've acquired as low as 30.
Yeah.
Is there a threshold at the top end?
It doesn't.
I know you're pretty fearless.
It doesn't. No. It doesn't.
You made some fairly large acquisitions. I know.
We have. Yeah. In the past, it doesn't make any difference as long as all the financials and it all makes sense. Yeah. There shouldn't be any ceiling.
Are there any red flags when you're looking at rent rolls? You're going, I don't know about that one. That's got some alarm bells on it. Are there any?
Well, you've got to look at the motivation of the seller.
Yeah. Okay.
What are they doing? Why are they selling? Are they selling because they're exiting the business?
Yeah.
Is that going to be a safe bet? Or are they selling because there's financial troubles there?
Yeah.
And then in 6 months they're going to reopen up? They're all risks and things you need to have a look at. So the motivation is a big piece in that. If you're going to invest millions of dollars potentially into an acquisition, you have to be very careful on what that all looks like. And does it fit with your business?
Yeah.
geographically, what does that team look like? Do you need to take all the staff? Do you not? Like, there's a lot of moving pieces, and I wouldn't say that any acquisition is the same.
No, and you're obviously going to get a variation in. You may well get a variation in management fees as well.
Oh, that's where you got to be careful.
So have you been through an acquisition where they've been on a lower fee base, and you've so how have you managed to? That's a big deal.
It's well, you've obviously got to,
because you've got a liability. Because if the owner goes, "What do you mean it's going up from X to Y? I'm off."
Well, you can't even touch that for at least 12 months.
Yeah,
you've got to prove.
So do you
yourself.
demonstrate? Okay.
Yeah. So you've got to onboard it, knowing what it is, and obviously you've paid accordingly for that, and then from there, demonstrate your service levels, and then you can increase the fees over time.
Because then everything becomes if you've demonstrated value.
Yeah.
And look, how do you articulate value? By being present and being proactive in the management of that particular asset, then everything becomes negotiable.
Show them that you do rent reviews and you're increasing their rent and you're proactively doing it. Then they don't mind. Probably the rent review stage is the opportunity to increase and get things re-signed up. Because we're increasing your rent, our fees are just slightly going up, and build that into that process too.
Over the years, and like I've had many good property managers, but I've had some good property managers who communicate with me well and articulate value well, and want to, just we're simple folk, owners and investors. Sure. I can tell you, we're all sorts of shapes and sizes, and if you don't educate us, we will remain in a shell and uneducated. But just a simple notion of, when you come to rental reviews, and you can end up with some, kind of owners with dollar signs in their eyes and thinking that they've worked out rents can be higher than they really are in terms of where the market is. Educating owners on the impact of vacancy, and we've all had properties that have ended up not necessarily because you tried. No. Well, at the bottom line, every property will rent at some rental value,
at some stage, and it is a key thing, and it's a bit of a balancing act, you could say, because yes, you could increase a little bit more, but not at the risk of that tenant leaving and then causing a re-letting fee. Great for the business, but not necessarily for the owner. But also creating a vacancy period too, potentially of a couple of weeks changeover. So all those factors need to be part of that. And reaching out to the tenants and finding out their intentions, probably before you speak to your owner, is the preference there. Because once you speak to the owner, you already are armed with, these tenants are happy to stay on. We just need to work out the price, what it looks like. Versus they've been building their house. We've only got another 2 months left with them. We can put a rent increase in place, but just bear in mind that don't go too high, because if we go to market, you're not going to get that, and balance it accordingly. Every case is individual. Yes.
Just look, we are running out of time, and I know that I've grabbed you when you've come to our studios to do other things. So I'm cognizant of that.
That's fine.
I'm just interested just in your local area now. You're in Mornington and Mount Eliza is your kind of your territory, and I would imagine it extends out a little bit beyond that.
It does, yeah.
What sort of trends are you seeing at the moment in your local marketplace with either vacancy rates or expectations of owners? Are there any particular things that you're seeing
vacancy
happening?
rates are quite low.
Yeah.
We're under 1%.
Okay, that's tight.
So very, very tight. There's not a lot coming on the market.
What sort of pressure is that putting on rental values?
It is definitely increased them quite substantially. But what we're also seeing a bit of a trend is the top end of the sales market isn't moving as much.
Okay.
So these owners are not in a position that they need to sell these properties. Mm-hmm. So we're finding a lot of those are converting over into the rental space, and so we're seeing a lot more high-end rentals coming. And I'm talking that $1,500 to $2,000 a week bracket.
Yeah, it's very good. Nice.
And that's where your sales team and being in with them is a key element to that. So I'm sitting in with vendor meetings with some of our sales team at the moment, because it's like, that's the second option. We're not going to achieve this price. We've been to market. Now you don't want to sell it under that. Understand that. This is our other option. We can rent it and reassess it in 12 months' time.
And we're obviously going through sort of a shift in terms of the economy, and your particular area in
Yes.
Melbourne. Melbourne's got some challenges, but look, I mean, a fantastic place. I think
great,
for
yeah.
investors and for if you can digest all of the various sort of compliance issues down there and cope with the taxes.
It's not as bad as what it gets made out. Like, people need to just be educated around it.
The PMs are really switched on.
Yeah, look, like the compliance checks, the minimum standards, that's all just business as usual for us. There's nothing to, and most of the properties meet the requirements anyway.
Yeah.
It's just a matter of documenting it. Could be a few blind cords that gets fixed up sort of upon inspection. But apart from that, it's not a big deal as what it gets made out to be.
We've run out of time, Alistair, but we shall catch up again. It's always a pleasure to catch up. It's just an extension of the conversation we invariably have whenever we have a coffee.
No, it's always great.
Thank you very much for taking time. For everyone else, really appreciate you tuning in. We love having you with us. Let us know what you think. We'll cover off on whatever topics you find of value. But for this month, signing off with PMX.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.